Good afternoon, welcome to a new update, and in this update we're going to do a fundamental review of a project that is within the Avalanche ecosystem, and it's called Trader Joe. But before we're going to continue, do not forget to subscribe beneath, like this YouTube update, and check out my Twitter and Instagram where you can find daily updates when it comes to the cryptocurrency markets. So when we're looking at the actual projects right now, layer ones have been doing great. And one of them is Avalanche, which we have been covering a few months ago with a fundamental review already. We have been covering the entire ecosystem, and this time we're going to dive into one of the projects that's being built inside the entire platform Avalanche, which is Trader Joe. So let's head towards the fundamental review. So as we have been covering Avalanche, the focus of the Avalanche eco chain or ecosystem is currently mostly on its C chain, an Ethereum virtual machine compatible chain that is a lot more scalable. This is important as the Ethereum chain lacks scalability issues, and that's why layer 1s overall have been doing great, including Avalanche, as it's a very easy and cheap alternative to Ethereum. Also Solana has been doing great, and Phantom, for instance, but all those projects have been building up heavily in this entire new Web 3.0 ecosystem. Now, we also have the Rush liquidity program, incentive program, which was dedicated to bring blue DeFi chips towards Avalanche, which was launched in August with this post. In which 180 million was raised for the entire incentive program, and a few of those blue chips, including Aave and Curve, were moving towards the Avalanche ecosystem as well, or expanded towards that ecosystem, which has been benefiting the growing attention to Avalanche, which has been a reason for the actual growth of the entire ecosystem, through which Trader Joe is one of the projects that's currently being built on Avalanche. At the center of this platform is the AMM exchange. The team behind Trader Joe stays anonymous, but that did not stop it from becoming the largest DeFi protocol being built on the Avalanche ecosystem. It gained further legitimacy after a fundraise of 5 million, in which some solid names participated, which were Three Arrows, Deviants Capital, and Delphi Capital. It also gained an approval from the Avalanche ecosystem, which participated in the fundraise as well. So the central topic of Trader Joe, or the central mechanism that you can use inside this, is just the AMM exchange, with a very simple interface where you can swap whatever token you want towards another token, and you also got a price chart in here, which is pretty straightforward for every exchange. In this case, you can swap from AVAX to USDT, or you can swap from a different coin towards DAI. You have to connect your wallet through any wallet that you can build into your Chrome, but it's a very easy to use exchange. A fee is taken per trade, which is 0.3%, which is comparable to Uniswap, and is divided between the LPs and the Joe token farm, which is, we'll talk about that in a little bit more in a few minutes. Trader Joe has also made it easy to acquire LP tokens through a solution which is called Zap. Whereas it usually requires 3 steps, Zap allows users to acquire LP tokens with just one transaction, allowing for a better overall user experience. Once the LP tokens are acquired, these can be used to significantly enhance the rewards earned on them through the Trader Joe's farming solution. Then next, we also got a different possibility inside the actual Trader Joe ecosystem, which is lending. We also know we've got the pool and farming, but I want to specifically discuss the lending part of this Trader Joe part, which is called Banker Joe, which it entered in another massive industry in DeFi, and it started in October of this year. Lending has become increasingly popular, with the 5 lending protocols holding approximately 35 billion in total, which keeps increasing. On Avalanche, the top 5 has less than 5 billion. As the Avalanche ecosystem is growing, which it is rapidly doing right now, this number will increase heavily, and Banker Joe has positioned itself well to benefit a great deal from this trend as well and to take a significant market share. Its offerings in this area are still limited, although it already reached 1 billion in total deposits. Banker Joe thus allows for leverage exposure, something which is gaining in popularity as well. So a major plus of the entire ecosystem of Trader Joe is that its governance token can be used to share in the profits gained on the platform. So those that are staking their Joe tokens will get XJoe, as you can see here on the bottom. XJoe tokens which can be swapped for the original Joe tokens, including the rewards. So where are these benefits coming from? The pool of staked Joe will receive 0.05% of every transaction on Trader Joe. A percentage of Banker Joe will also go to the pool, and by doing so, token holders directly benefit from the growth of the platform. So as more people trade on a Trader Joe, the value of the token should go up as well. At least that is the theory right now. It sounds pretty straightforward and logical, but there are plenty of competitors that do not have this mechanism. SushiSwap is a good example of one that does. It was the main feature it added to the copy of Uniswap. In the future, XJoe is expected to be added to Banker Joe as well, further increasing the utility, potential rewards, and therefore also the overall value of the token. Staking rewards in the XJoe pool are currently 32% APR. The yield farm pool for XJoe is 21% APR. And within this lending protocol, you get 70% API. Now let's rewind back towards to the Rush incentive program. Trader Joe was also part of this one, and it received 10 million from the Avalanche Foundation for liquidity instead of rewards on the platform, to which it added another 10 million itself as well. This is a pretty significant portion of the 180 million Rush incentive program. This capital is used to attract more users with higher fees. The same goes for the high token emission. 50% of the total token supply is used to reward liquidity providers until January of 2024. So that's a little background of the entire platform or project within the platform Avalanche. Let's dive into a few of the statistics of Trader Joe, which we can see on the dashboard that we have here. It is clear that there is an uptrend in volume traded on the actual exchange. Now I'll just show you that the volume has been growing heavily. Just like the market has been dying down a little bit in the past weeks, the volume has decreased too, but you can see that on every exchange. We can also see that the liquidity on the actual exchange, or the AMM, has been growing significantly since August of this year, as it has been growing from 26 million to 1.2 billion at this stage. So the overall liquidity is in an uptrend. The recent dip is both not too weird, as sentiment has been deteriorating due to the drop of the entire crypto market, which decreased the amount of liquidity, but it also decreased the amount of trades being made. So as the trading volume increases, so do the fees, as it can be seen when looking at the total revenue on token terminal, which we can see here. We can also see the recent dip in the markets, but the actual revenue has been increasing significantly, as we can see with the green caskets here. The fully diluted market cap remains the same, but since the actual value locked up in the ecosystem, we can see that the revenue is increasing as well. The connection between sentiment and overall revenue by Trader Joe is a lot clearer here. However, despite the overall success, the Joe token has not performed that well recently. This could be due to the stellar initial growth of the token, but due to the overall success, Joe token trades at a mere price to sale ratio of less than 2, making it one of the lowest value tokens on token terminal after only SpookySwap, despite Joe tokens hold as getting a significant portion of the actual fees. Also, what we can see in the entire Avalanche ecosystem, the C-chain activity, which has been growing heavily recently. It's clear that Avalanche is doing great at the moment. as the amount of daily TX and daily gas has been increasing heavily, while the amount of transactions being done has been increasing heavily recently. So the entire ecosystem of Avalanche will be growing heavily. Average TPS has been growing as well, and also the daily active addresses has been growing significantly, as we can see on the bottom here. So the entire ecosystem of Avalanche is doing great. Coming back to a conclusion, I expect to see a lot from the Avalanche ecosystem. It's already well underway, but will likely see further growth going forward. Many new interesting projects are launching or upcoming. Trader Joe is one of the earlier projects that benefited from the sudden popularity increase after the Rush program. With a TVL of over 2 billion, it is second to only Aave at 3 billion in the Avalanche DeFi ecosystem. Trader Joe is one of the projects in the Avalanche ecosystem that has tremendous potential. By already becoming the market leader and gaining solid backers, it positioned itself well for further growth of the Avalanche ecosystem, as many new projects choose to list their token on its exchange. As Avalanche expands, I believe that Trader Joe will grow with it, both its lending solution as well as its exchange. By sharing the rewards of the platform, its user can benefit greatly from the associated increased fees. We can already see this with current high API for Joe stakers. So that's the update for today. I hope you will be seeing me tomorrow again for a fresh new one. Don't forget to subscribe, and I'll see you again soon.